We've got just what you need right here at Femi Wash Media. Call it the Midas touch, and you wouldn't be wrong. Let us record, produce, mix, and master your audio like nobody does. Reach us on our contact today for the best quality job.
It's a beautiful Friday morning. You're welcome to the news updates on Souqnews Television. We are reaching you live from our studios in Lagos. I am Grace Komolafe. Starting with one of the stories making headlines. Nigeria is set to release its first rebased gross domestic product figures in over a decade, a move expected to boost investor confidence and improve economic planning. According to the National Bureau of Statistics, the rebasing will reflect updated data on emerging sectors like technology, creative industries, and services, areas previously underrepresented in official GDP estimates. The last rebasing in 2014 nearly doubled the country's GDP to $510 billion, making Nigeria Africa's largest economy at the time. Experts say the new figures could reposition Nigeria among the continent's top economies and attract more foreign investments. While the rebasing will not generate immediate revenue, it provides a clearer picture of the economy's structure, aiding fiscal planning, resource allocation, and policy formulation. However, analysts have cautioned that the benefits of rebasing may be limited unless the government also addresses structural challenges such as currency instability and infrastructure deficits. The revised data is expected to be released later in 2025. Now, the federal government's earnings from oil royalties and related sources surged from 4 trillion naira in 2023 to 12 trillion naira in 2024, following the devaluation of naira. This 200% increase was reported by the Nigerian Upstream Petroleum Regulatory Commission, NUPRC, largely due to the conversion of dollar-dominated charges at significant weaker exchange rates. Oil and gas royalties accounted for over 11 trillion naira of the total, while gas flare penalties, concession rentals, and lease renewables also saw strong growth. However, experts caution that the revenue spike may be nominal rather than real, driven mostly by currency depreciation rather than expanded output or improved efficiency. They advise comparing dollar revenues year on year for a clearer picture of performance. Away from that, the Nigerian stock market gained a record 1.806 trillion naira on Thursday, July 10th, in its biggest one-day rally this year, driven by renewed investor confidence and improving market sentiment. The market capitalization rose by 2.35% to close at 78.726 trillion naira, while the all-share index jumped over 2,400 points to settle at 124,446.80. Gains were led by top-performing stocks like UBA, FTN Cocoa, and UPDC, all rising by 10% as investors bet on better half-year earnings and a more stable foreign exchange outlook. Analysts say the rally reflects stronger fundamentals and optimism about reforms, but caution that coming earnings results could determine whether the momentum holds. Moving ahead, the Lagos State government has announced a partnership with China through the China-Nigeria Low Carbon Demonstration Initiative to implement the LEKKI Low Carbon Demonstration Zone project. The initiative revealed during a meeting between Lagos officials and the Next-Tier team in Ikeja aims to cut carbon emissions, reduce air pollution, and lower the climate risk index in the state. Commissioner for Environment and Water Resources Tokunbo Wahab said the project aligns with Lagos climate goals, including the 2023 Climate Adaptation Resilience Action Plan. He emphasized the project's potential to improve public health, promote clean energy access, and create green jobs. He also assured the ministry's full support through data sharing, human resources, and funding. Michael Evenso, director at the National Council on climate change highlighted the Chinese delegation's visit as part of effort to strengthen the partnership and attract private sector investment. He noted that Lagos offers a strong environment for climate-related business to thrive. Moving away from Nigeria, the United States President Donald Trump has threatened to impose a 35% tariff on imports from Canada, intensifying a trade standoff with one of America's largest trading partners. In a Thursday letter sent to Canadian leaders, Trump signaled the tariffs could begin August 1 if no deal is reached. The move risks disrupting $413 billion worth of Canadian exports to the United States and comes amid wider threats of tariff hikes on other countries. Trump said new rates would depend on Canada's cooperation on drug control and trade compliance. Trump also revealed plans for blanket tariffs of up to 20% on nations without trade deals, warning that all remaining countries will pay while Canada and the United States remains in talks ahead of a July 21 deadline. Canadian officials have yet to formally respond. Analysts warn the escalating trade uncertainty could destabilize cross-border investment, disrupt supply chain, and lead to retaliatory tariffs from Canada, possibly affecting American export valued at $349 billion approximately. And that's the news this morning. We say many thanks for watching. Do not forget other programs are coming your way shortly. Most importantly, Just Africa. My name is Grace Komolafe. Have a good morning.